What is going on, my stock market bulls and bears? I'm your host, Terry, and welcome to the channel, Buy the Dip. That's right, guys. This video here is something that I think I needed to do. I'm talking about one of our competitors in Draftkings, why I'm very bearish on that stock, why I think it's just super overvalued, and there's a couple articles that I want to go over some key points. Just kind of want to get right to it, why I love GNOG. You know, there's all the great things about Golden Nugget, why we are cash flow positive, where DraftKings is cash flow negative. They're not even going to be cash flow positive to possibly 2024 or 2025. And there's a couple things about DraftKings that I want to discuss in this video, why I am a bear on it, and whether you all can comment down below. Do you agree? Do you disagree? I'm sure I'll probably get a lot of hate because bear videos don't usually get a lot of love, but listen to what I got to say before you give the thumbs down, because I know you all going to hate this. But let's get to the video, guys. All right, guys. And I wanted to just take the camera off. I just want to focus more on the details of this video. So as you can see here, DraftKings at $70 right now. You can see the chart here. The chart does look pretty good. I mean, year to date, this thing is up. It says 58%. So that's pretty phenomenal. Don't get me wrong. The stock is performing pretty well. It definitely has its ups and downs. It's doing pretty good. And we know you got Jim Cramer in here pumping this up. He is a part of DraftKings, so Jim Cramer truly loves the stock. And as you know, he cannot say anything about Golden Nugget because he is affiliated with DraftKings, so I don't think that's kind of right, but it is what it is. We also got Kathy Woods. That's right. She is a big bull on this as well. She's been buying this in the ARK. So anything Kathy buys turns to gold. Kathy's been buying this stock like crazy, so it has been shooting up. So I want to get in here and talk about a couple things that kind of just don't set right with me on this, and you guys can go from there whether you agree or disagree. All right, guys, and here is the article that kind of just, I don't know, this one just did not set well with me, and I just wanted to get you guys' opinion on it. Article just put out here, actually, you know, this was like first published yesterday, and it was updated again this morning. Making it rain, DraftKings co-founders pocket more than $600 million in combined in 2020. So total compensation for the trio included more than $100,000 in Super Bowl expenses. Here is the co-founders right here: Jason Robbins, Matthew Kalish, and Paul Liberman, DraftKings. So as you know, going public has made it rain for DraftKings co-founders. These three guys here, they pocketed more than $600 million in 2020. So here it says the online sports betting company DraftKings proxy statement filed late Friday. The company said total compensation for Robbins, who is the chief executive officer, was $236 million in 2020, up $4.4 million from 2019. For Kalish, who is also the president of DraftKings in North America, total compensation last year rose to $197 million from $2.11 million in 2019. Lieberman, who is also the president of the global technology product, had compensations of $197 million in 2020 after $2.14 million the year before. So I don't know, man. These numbers seem a little bit out here for me. But listen to this here. This is what really gets me. The breakdown of the compensation packages for the co-founders show the bulk of the money in 2020 came from stock awards. Here's the breakdown for each co-founder. Now, this here is where I have the problem at. I understand if you have a salary, you may have a base salary. You may get a little bit of money. But look at this here. Robbins, his salary was $650,000, up from $400,000 in 2019. So this man grew his salary $250,000 year over year. Okay, seems a little much. I mean, who gets a $250,000 raise? And, you know, so basically if his pay in 2019 was $400,000, he got basically a 60% increase on his salary in 1 year. Now that seems a little drastic. I mean, as you know, as the working class like us, we're looking to get 3 to 5% on a raise, but this man gets a 55% increase. This one here is what really just did not set well with me right here. Bonus, $2.9 million after zero in 2019. So he got zero bonuses on DraftKings in 2019, but in 2020 he got 2.98 million. I don't know, guys. It doesn't set well with me. Stock awards, $231 million in stock awards. I don't know, man. Like I said, these CEOs, man, they love to spend. As you know, they spend out crazy on advertisements. Non-equity incentive plans, $1.95 million after $800,000 in 2019. So right there is over 100%, about 120% increase on the incentive plan compensation. All their compensation, $75,000, including from Super Bowl expenses. Okay, I can live with that. Here's another one. Khalif, salary, $425,000, up from $300,000 the year before. He roughly got about 33 or 35% increase in his salary alone. But look at the bonus, man. I can live with the salary. The salary increase I can understand. But the bonuses and the stock awards just does not set well with me, and that's why I'm a big bear in this company. Bonuses, $1.5 million in bonuses in 2020, but in 2019 they got zero. I don't know, guys. Like I said, this is not setting well with me. Stock awards, $194 million in stock awards in 2020. Oh, man. I don't know. How can you still be like bullish on this company after that? Non-equity incentive plan compensations, $106 million after $480,000 in 2019. So there's over another 50-60% increase. And down here we got Lieberman. His salary was the same. He's up to $425,000 from $300,000, up about 30% from last year. And the bonuses again, $1.5 million in bonuses after zero in 2019. So 2019, this man got $0 in bonuses, but in 2020 they took $1.5 million. Stock awards, $194 million in stock. The non-equity incentive plans here, as you can see, is up another 50-60% for this gentleman as well. And they also got some compensation for the Super Bowl ads. So there it is, guys. There is some of the numbers, and I don't know. What do you think? Is that a little much for these guys taking these bonuses and these stock incentive plans off the top of the business? So we're going to go here and talk a little one-on-one. All right, guys. So I just wanted to come back here after kind of going over that article. And, I did read that article, but I did want to read it because it has some great numbers in there and kind of shows you what's going on. But here are some of the things that I do hear about this. Now, I don't like the way that DraftKings spends money. You want to get your business to be cash flow positive. The business is just cash flow negative, and that negative is growing year over year. They're not cutting down their losses. They're increasing their losses every year. Like I said, they're not looking to be profitable for the next 4 years possibly. 3 to 5 years is about where it's supposed to be. 2024, 2025, they might be cash flow positive. So here's the thing. They do spend a lot of money on advertisements. There is some pictures in my little local town of a DraftKings billboard advertising for Virginia. I live in Maryland, so I can give them credit. DraftKings does spend money to advertise. And you know what? You can raise the argument that, I think they may spend a little too much, but the argument on the other side of the bull case is that they're spending the money now to take the market share. Okay, you know what? I can live with that. That could remain to be seen. If they're spending all this money now on the online sports betting and gambling because they plan on buying the market share down the road, that I can understand. That I truly understand. But what I don't agree with is the CEOs taking over $600 million from a company that is currently cash flow negative. I do not agree with that. When you're trying to grow a business and you're trying to make it cash positive, you can't scalp $600 million off the balance sheet, guys. And then, there's one other thing we got to get in and cover real quick as well. Let me get to it back here real quick. But it just, it just doesn't rub me. There's so much stuff. This stock does not rub me the right way. This article here, DraftKings stock drops after plans of a $1 billion in convertible debt. So they did an offering. They lowered they did a convertible debt. So not only did the CEOs take $600 million off of DraftKings' balance sheet, but then they do a $1 billion debt offering and taking the shares down. But for some reason, this stock just likes to keep going up. And I think people are just blindly buying this in because of Kathy Wood and ARK Invest. And like I said, Kathy's great. I love Kathy, but I think they got it wrong on this one, man. Something is not right with this DraftKings. I just don't agree with it. I am not purchasing anything. I said this thing would have to get down to $20, $30 for me to even consider it. As you can see, this thing is still setting at $70-some right now. But the way this company is running the balance sheet, now I understand not everything can be, cash flow positive, but I do like to see a business that is trying to get to cash flow positive. But when you see articles out here on a company that not only did the CEOs just take money from it, and not only, I can understand the salary increases, guys. The salary increases, their yearly salaries, I completely understand that. They deserve a raise. But all that money in bonuses and all that money in those shares, that I don't know. Like, that dilutes your share value. So, I don't know. $600 million those three gentlemen took. So, you might as well just say $200 million apiece those gentlemen took from DraftKings. Now, I don't know. Like I said, that's why I love Golden Nugget. Golden Nugget may not be out there blowing all the money on advertisement and all, but they are spending it wisely. But Golden Nugget is putting money in the bank. We are already cash flow positive, guys. So if DraftKings keep expanding, how much more in debt are they going to go as more states become available? So that is what I pose to you. Golden Nugget can afford to go a little bit in the negative if we do more advertising, expand into more states, spend more money to build out the infrastructure and, the whole system here. But DraftKings, you need to stop what you're doing, man. I'm just saying, it's just crazy. I don't understand it. It's just unbelievable. Real quick, I want to touch base on when Golden Nugget did merge in with the GNOG. Now, there's a 3% royalty that the online pays to Landry's land-based. I think that's truly fair because the land-based casino kind of, built the branding and all. And for the Golden Nugget online, they only have to pay a 3% royalty. That's a no-brainer. That is a no-brainer. They get to use the name, they get, the logos, all that, and you get Tillman in there for 3% a month. That's a no-brainer, guys. So that's why I like Golden Nugget better than DraftKings. I think DraftKings is overvalued. It's just, I don't know. I mean, is it ever going to go down? It probably won't. It for some reason, this stock, with the way people, like Jim Cramer pumps it up, Kathy Woods keeps buying it, people just keep buying it because, they advertise like crazy. But guys, you got to think about the future on this one. When will an analyst come down and just strike this down to $40, $50? It is possible. With this way people's taking money off the balance sheet and everything. So guys, a little bit of a video here, but if you appreciate this video, hit the thumbs up. Join the Thumbs Up Nation. Guys, I got the links down below for Weeble and Patreon. Check them out. Guys, I'll catch you in the next one. Peace.